Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. And the Fed had its meeting, and well, the market didn't like it. It sold off, and so we are. I definitely sold a lot of stuff today. It's not all doom and gloom out there, but it's it's showing once again where the strength in the market is. And it's not in tech. I can tell you that it's just not in tech, and not that it's the end of the world or anything, but boy, I tell you, it really makes a difference. I mean, where we're seeing strength is primarily in in the oil and gas area. Once again, I keep like broken record just talking about that, and it's just looking. Um, some of the other areas, though, that are starting to come in, we're starting to see some interest in medical, and that seems to be, making its way. So, I mean, basically, that's kind of what's going on. Basically, the Dow traded down after the Fed meeting, after the minutes were released. It looks like, we're going to get some interest rate hikes here. And, because of that, of course, it's not going to be great news for some of the tech stocks. Tesla sold off. I was stopped out at 1095. I was topped out yesterday, actually. Also, Nvidia is down. So just kind of not looking strong regarding everything here. Just want to show you the overview of the market. The Dow is off, of course. S&P is down. The biggest hit, of course, was on the was on the Nasdaq, and that was down too. So the thing about the Nasdaq, that's also the QQQ. I interestingly sold part of my QQQ positions today. I took a little profit there. I think it'll bounce back, but we definitely want to take a look at that in just a second. So let's go to kind of what's kind of the bulls and the bears. Kind of try to see if we can read some of those tea leaves out there. And basically, this isn't, the end all be all, but basically the way this kind of is that when the number of bulls, outnumber the bears, then, we get this reversal. Now, we had this reversal a few days ago, and I thought we were going to bottom, but it looks like we're reversed back again. So the market's really undecided, but I think it's getting more bearish. I mean, we'll see kind of, we'll kind of see what happens here. But right now the bulls are in control, but just barely. The bears are coming up 34%. So it does look like this might be. Hopefully, this is going to be near a bottom. We don't know, but for right now, we're probably going to go a little bit lower. Basically, that's kind of just what this is saying. Just wanted to give you some hope here. Here's a stock that I did buy, and I think it's doing very well. And let's see if we can go back to. See if we can go back here. It's called Novo Nordisk, and I did buy this one, and it's looking pretty darn good. I bought it at 115.83 this morning, and it's up. It's off a little bit after hours, but I think this is where I'm starting to see some strength in the market. I bought Lilly yesterday. That was up as well. That seems to be where the strength is right now. This is a very defensive play. The interesting thing about Novo Nordisk, it's a Danish company, but it has very strong, of course, sales here in the United States. And it is one of those things that even with inflation, I think people are still going to be buying insulin. This is I think the number one manufacturer of insulin in the world. Just want to show you the chart on it. This is the daily chart. You can see we're coming right up to this buy point. And what's so interesting about this is that the buy point is 117.35. We're off a little bit at 115.27. I purchased it yesterday. I mean, just at the beginning of the day, we came up all the way up to the buy point and then pulled back. I bought it 15 1583, and that's looking pretty good. I definitely think we're going to see another run on the buy point tomorrow. Hopefully, the checklist is okay, 67%. This is my minimum for buying a stock, but this is one you might want to look at. And I do think this is going to be viable tomorrow. It's Novo Nordisk, NVO is the symbol there, and it's looking fairly good. Coming right up to that buy point, and hopefully, we'll see some strength there. That's the main thing here. Just try to show you kind of some alternatives here, to make it not so grim. I do have the ETF strategy, and that basically how that works is the ETF strategy works. When the market moves from a downtrend to an uptrend, that's when you buy the ETF. In this case, I bought the QQQ on the 16th of March, and as you can see, this is the closing prices here for the ETF. Now, this is as of yesterday. I don't have the closing price for today calculated here, but this shows you kind of the average return on this one. Basically, in about 15 days, we're averaging about a 5.75% return. So that's pretty good. We are 100% in this position. Now, I use this for the cash accounts. So these are cash money that I'm going to be needing in about 270 days or less. I will do this strategy just to get a little bit of extra money on it. It's better than just sitting it in an account and getting zero. I use this to pay property tax, so that kind of thing. But this is the strategy as it's been today. We got a pullback yesterday. We're going to probably see a little bit down from here, but we're still not doing bad. I mean, 3 to 5% in a month in this market is not bad. So that's the ETF strategy. Kind of an interesting way to make some money out there. All right, let's look at the stocks that I did buy today. Of course, we talked a little bit about Novo Nordisk, and this one, NVO, I did buy today. And I bought it a little bit lower than the number here. It shows 116.54. I bought it at 115.83, just as it was moving up to that buy point. Now, the buy point, 117.35. So we're getting right up to that buy point. But this one might be a good one to potentially look at. It's got a very strong relative strength, 96, and in general, looking pretty darn good in terms of a stock. Now, it's a very defensive area, of course. Medical, it's kind of defensive. I've been buying the oil stocks. I gotten shaken out of a few of them. I actually ended up getting shaken out of Hess. Now, I did make a profit in Hess. My strategy is to buy it, let it run, and then push the stop loss up. When it pulls back, I'm out for a profit. And I'll show you just in a second the stocks that I was taken out of today. But let's first look at the small portfolio. This is the demonstration portfolio that I use. I only have 3 stocks in this. Amazingly, Novo Nordisk, the one that we bought today, which I'm up on about 1%, not a whole lot. A company called Sinclair Oil, Dyno, down a little bit on that one, and Golden Ocean Shipping, very, very small position in Golden Ocean. But these are stocks that basically kind of show you where I'm at. I'm going to show you the stocks that I sold today. These are mostly as a result of stop losses, and I always like to do stop losses. Why? Because it locks in. Hopefully, it locks in your profit, but it also protects you from down days like today. And it was really kind of a bummer today. I mean, look at this. I was sold out of Quanta Services, ANET, St. Joe Company, CF. This is a fertilizer company. I thought it would do far better. Hess, and a company that I had bought this morning, but it didn't work. And this was a shipping company, G&K. So one of the ones I kind of want to look at right now is Hess. I've held this for a little bit of time. I did make some money on this one. Not a lot. I'll be honest with you. Not a lot on this one. But this was definitely a swing trade for me. So let's kind of jump on over to the Hess chart. and you'll be able to kick a quick look at it. We were doing really, really well, moving up here, and then it just stalled, and boom, I was out right at about this level here. This is the mark for where the sell was, but we were moving up very nicely, then pulled back. This one, I did I did buy in at 97.43, and ended up selling it right at about right about this level here. This is where my stop was. This is where my stop was here. The stop basically at 106. So not a bad run. 97.40 to 106 in about in about a little under 30 days, about 25 days. So not a bad return on this one. But again, this is sort of how I like to play it. I like to buy it right below that pivot, let it run up, and then hopefully, and then hopefully, when we sell it, we're selling it at a profit. But the way I try to do take the profits automatically is just let it ride up, push that stop loss up. My stop loss on this one, Hess, was right at 106. So pretty good run. Pretty good run. Almost 10%. In this kind of market, in swing trading, that's not a bad run. If you can keep them typically for, this amount of period of time, it works pretty good. I also have another one didn't do quite as well on, and that's St. Joe Company. Joe, take a look at that one, see how we traded that one. And, this is just basically, yeah, there we go. Okay, so this is going to give us kind of an idea sort of how Joe kind of came up. But this is why, you need to set your stop losses, because it can be amazingly, it can really turn on you very, very quickly. With Joe, bought in at 59, and as you can see, we run it up here, and I bought another position up here, but I had my stop loss set. Set, and as you can see, it just came all the way down to that 21-day line. That's why almost always that's a good place to put your stop losses, right at that 21-day line. So kind of round tripped that one. That was kind of disappointing. I'd done very well. I'd gone up 10%. This is why it's always a good idea to just kind of send that stop loss up higher and higher. So didn't quite eat my own dog food on that one, and that's what happens sometimes when you do that. Just wanted to give you a chance to take a look at the ready list that we have. Very nice ready list. It's a few days old, but you can get it directly by going to bit.ly/DTF0101, and that will get you on the ready list. These are things that are setting up, getting ready to buy, hopefully, and so you can take a look at those. All right, let's take a look at some of the people that are waiting on TikTok. Thank you so very much. First question is on NVIDIA, and NVIDIA just got totally taken out today. I've been trying to come back into the techs, but it has not been pretty for the techs. I have to say it's been a tough row when it comes to the tech stocks, and NVIDIA is truly a great stock, but it just took a header today, along with the Fed minutes. Basically, what's happening? The Fed is signaling, of course, that we're going to get higher. We're going to get higher interest rates, and of course, that's going to kill growth stocks, at least for the time being, like NVIDIA. So, you want to kind of be transitioning out of you want to be transitioning out of some of those areas in the market, like tech. And I know this is hard because, many people have only traded tech stocks. They've never traded cyclicals. And this is difficult, but the cyclicals are kind of where it's at. I'm starting to see medical products pick up, but I'm only going with the strongest ones. Again, Lilly, and I want to show you that one, and also Novo Nordisk. I just think you got to be super careful with tech. I got knocked out of of ANET. Now I did make a little bit of money on it. That was a networking play, but in general, even the chip plays, even the Nvidias of the world are struggling. So with the higher interest rates, these valuations are going to come down quite a bit on companies like Nvidia. So I would just kind of take a step back right now, and I wouldn't be probably trying to throw any money at Nvidia right now. I think it's too difficult to find a bottom. I mean, there is going to be somebody that's going to buy it at the very, very bottom, but it's just too difficult. Right now with Nvidia, I just think you got to take a little bit of a step back. Part of the problem with Nvidia and many of these other tech stocks, they're great stocks, but they have extremely high PE ratios. Now, normally this is not an issue in a growth market, but we've changed away from the growth market into a much more inflation-sensitive market. In an inflation-sensitive market, PE matters a lot. And right now, unfortunately, with Nvidia, the PE ratio is a 58, which I think is deserved in a lot of ways, but I just don't want to buy it right now because likely it's going to get punished a little bit in this kind of market. A 58 PE, probably too high. So you kind of got to look and see where's the money flowing. The money's flowing to safety. And so let's take a look at Lilly. This is one I did buy yesterday, and we'll kind of compare the PEs on it. It's high as well, but it's lower than Nvidia. It's about not quite half of the PE of Nvidia. The PE on this one about 36. So again, high, but not as high. Over 50 PE, you got to be careful with some of these stocks, no matter how good they are. And as you can see, the funds are in this one, strong cash flow. So I've been looking at some of the drug stocks, and I'm not a huge fan of the drug stocks. I'll be honest with you, but those are some of the stocks that tend to be looking better right now. And so Nvidia, you just got to stay out of the water, I think, on that one. It's just it's tough, but I think just wait for it to see what's going to happen. Matt on YouTube here is interested in taking a look at Cube. Now, this is a good one. REITs are doing well currently, and Cube is a storage REIT. The good thing about REITs, and is that they do pay by law. They have to distribute their earnings. So, and Cube is one of the better ones. I was in this one. I did sell it. I was in it. It ran up, and then I did sell out of this one, and then it retreated, and now it's forming a base. There's a good argument here if you're not already in the stock, that there's this new consolidation, this cup with handle that's at 54.08. So 54.08 really is the buy point on this. We're extremely close to it. We're very, very, very close to the buy point on Cube, and this is the kind of stock you want to definitely be taking a look at. So, so the Cube buy point is equal to, in this case, on this cup with handle, stage 1, 54.06. Put that up there for everybody. So this is definitely actionable. This stock is actionable. Thank you very much, Matt, for bringing this up. This has got a 100% checklist. I want to show that to everybody. I like buying in this market. I think you just got to buy strength. This definitely has strength. The REIT area is getting better. It's it's up. It's 47 out of 197. It's not the strongest It's not the strongest of all the areas in the market, but one of the advantages right now in this market with the REITs is, of course, that they have to do their payout, and the payout on CubeSmart is pretty good. It's pretty good. Again, taking a look at the PE ratio. Now, normally, in normal times, I wouldn't be looking that closely at the PE ratio because the market's a forward-looking indicator. But in this market, unfortunately, we got to look at it a lot. It's got a 25 PE. That's pretty darn good. And it does look like the return on equity is 10%. So that is also very, very good. So this is a cash flowing This is a cash flowing entity. It's come down, it's based, and it looks like it's making a move higher. So this would be a very good addition for anybody out there. Would be CubeSmart, CUBE. That's the symbol on it, and really appreciate. That's a great. That's a great call there, Matt. Thank you so much for that. Jay is looking at is talking about Tesla, and I think we need to talk a little bit about Tesla because it was doing so well. I was buying, I bought several positions in Tesla, but I was fortunately, and I've learned this over the years, was pretty quick on the stop. I put the stop in very, very tight, right below 1,000. The question is, will Tesla be able to hold 1,000? And this is a key level for Tesla. Interestingly enough, many years ago, there was a famous trader, Jesse Livermore, and I think you should definitely Google him because fascinating story on his life. But he was a great trader, and one of the things that he always said was that in many of these stocks, you get support at round numbers. And I definitely believe him because it seems as if, at least for right now, the floor seems to be about 1,000, and the buy point, the actual buy point where it's going to the higher high, is about 1,200. The actual calculated buy point on Tesla right now is 1,208, but right now, it's just tough to buy. It pulled way back. Tesla is very, very volatile. So, what I like to do playing Tesla right now, and I'm definitely in it, is when it pulls back, and then it comes support, and then people start moving in it. I'm in it, and then I just push my stop loss up, and then it pulls back, and I'm out. So it's a tough one. It's definitely it's definitely one that you want to play, but it's difficult, very, very difficult to play it correctly. But I do think that it's likely to stay above 1,000. That is sort of a floor that seems to be forming on Tesla. All right, let's see if we can, Nick, another question from let's go, Brandon, from the audience here on TikTok. Thank you very, very much. Are you bullish for tomorrow? Well, I'm guardedly optimistic. I'm always optimistic, but I do think that I think we still have to stay very guarded. I think we have to stay out of a lot of the tech stocks, and that's tough because I like buying those just as much as everyone else does. But I think we've got to go to where the strength in the market is. We still have strength in the oil and gas areas. We still have strength in, in some of the agricultural stocks. Even though I was stopped out of CF Industries, but there's another one that I do like that I'm also in. It's called Nutrien NTR. This is a fertilizer stock. This one did pull back a little bit, but I think it's basing, and I think it's ready to go. This is one you also might want to look at. I think it's actionable. It's not a perfect buy point. I'll be honest with you there. I did buy, as you can see, I've been adding to the position, and then I sold, and then I've bought back, and a bunch of times, 3 times I've bought this, and I do have a small position in this now because I've been selling into strength. But I definitely think we're going to get some support on this one. It's called Nutrien. At about $100 a share. This also has a 100% checklist. The symbol on this one is NTR. This is not an ideal buy point, but it has a 98% strength. So that is the kind of stock you want to buy. You want to buy the strongest stocks in the market right now because the market is weak. It's weak. So we want to buy the strongest of the strong. This is one that you might want to take a look at. Not a totally ideal place to buy it, but I do think that it's come down to that 21-day line. That's the green line here. I think we can, I don't know if you can see this. It's showing. Let me just kind of mark it there. There we go. Yeah, this is the 21-day line. It's getting some support there. This one I do think is actionable as well. Again, it is a fertilizer stock. Fertilizer is going to be in very, very short supply due to this war, unfortunately, in Russia with Russia and Ukraine. It's going to be in very, very short supply. So that's another actionable area that you could look at. Let's take a Joka says looks lots of red today on gold. Okay, let's look at GLD. GLD is the the ETF that covers the price of gold. It's a Spider Select, and it's if you want to get exposure to gold, this might not be a bad way. I think though that the miners are better, especially some of the junior miners. But there's some other stocks that I want to check out, just while we're on the subject of gold. Here's the thing with this one. This is in a buy zone right now. You could buy this one if you want to get exposure to gold. Here's the problem with gold. It's very spiky. As you can see, it at the beginning of March, it just went way up and then it's pulled back a little bit. But I think that there's growing anxiety out there. It depends on where the price of gold is selling, it is. But I think that if you bought it right at this line, this is the 200-day line, I think that is not necessary, is a fairly good place to buy it. This it's starting to have the golden cross, which is good. It's starting to look better. 84 relative strength. I'm still not a super fan. I'm not totally sold on gold yet in the market, but it definitely is. I definitely think this is viable right now. I probably wouldn't be piling into it though. I just wouldn't be piling into it based on a lot of other things. I think that you're going to get better exposure to the market if you're worried about inflation and you want gold with some of the junior miners. I'm going to take a look at FNV. The reason I like Franklin Nevada Gold, this is what it is because this one actually exposes you. This company owns positions in other companies that are producing gold right now. And this one is probably, I think, a better bet in terms of getting exposure to gold. Now, this is an actual stock, of course, Franklin Nevada Gold. It's a little bit extended here, but because this is a commodity play, I'm a little bit less strict in terms of where I would buy things. Here's what I like about this one. Way back here in August of 2021, it did make a high at about 163. Currently, it's about 163. So we're starting to see some strength, and we're starting to see this thing move higher. Franklin Nevada Gold. This is not a bad one. It has the minimum checklist, 67%. I do like this one because this is a junior gold miner. And here's one of the things I want to show you here. This might also be actionable, is the fact that we've got in the mining area, especially in the gold mining area, this is number 16 out of 197. So this is definitely in the top 20% of the market currently. And so that's one of the good ways that you could get access to gold. All right, let's take a look at some of the more, short Twitter. Good question. Let's look at Twitter. And of course, this is TWTR. This, of course, is the stock that Elon Musk privately bought 9.2% of. And he did that. Apparently, he just disclosed it, of course. But it jumped up basically on that disclosure, came up to that 200. It came up to the 200-day line, and then fell back down to earth. I wouldn't be a buyer of this one right now. Why? Because I don't think it is. I don't think it has confirmed above to the 200-day line. It's not a good idea to buy below that 200-day line. It's just if you I've done it a million times and I've been burned a million times on this. But right now we are 2.3% below that 200-day line. So for Twitter, I would not be a buyer here. I want to see some more strength. So I would watch list this one. Definitely. I would definitely watch list Twitter, but I wouldn't be a buyer. So watch list TWTR. And this is just kind of watch it, see if it moves above that 200-day line. But I wouldn't be a buyer here. I just wouldn't be a buyer of this one, just because it just doesn't look optimal. It just doesn't look optimal, even though it has a great environment and everything like that. Hey, thank you very much, new to the channel. Wow, thank you for seeing me. Why does Walmart keep going up? Good question. Part of the reason Walmart is going up is because, of course, of inflation. Because if Walmart does have some very, very good prices. WMT is doing very, very well. Also, you want to look at Costco as well. But right now, and I want to show you this, the charts for, the charts for um, Walmart is looking very good. It's in the buy zone. Now, what do I mean by the buy zone? Well, the way stocks trade is that they'll typically come up, they'll meet some resistance, and then they'll retreat, and they'll form a base. That's what's happened here. And then they'll punch through that base, and when they punch through that base, that's a good time to buy because there's power as it moves out of that base. Right now, the Walmart is looking for, for the retail stocks looking fairly good. Let's take a look and see kind of where we are in terms of the buy point. We're about 2% above the buy point. So we're right in the buy zone. Now, the buy zone is the buy point plus 5%. So that's kind of, and I use AI to calculate a lot of these things, but it's not an exact science. But basically, we're showing it about in the buy zone right now. Walmart's in the buy zone. Now, it does have a decent checklist, 67%. This is my minimum for buying, but and this does check the box here. I am not totally convinced on the on Walmart though. I think if you're looking to get exposure to the discount retailers, I think you want to look at Costco because I do think it does have a better chart. It's a smaller company, of course, and it's a little bit extended, but I do think that Costco, instead of Walmart, might be where you want to go. This has a stronger checklist at 78%. Now, it is extended a little bit above the buy zone, and it does appear that it's kind of hovering right there. I did have a full position. I let it run up, and then I sold it. But this one I do think is actionable. I mean, it's moving up very nicely. So if you want to get exposure to the retail, and I'm not really a fan of retail right now because of the inflation, this is kind of the one where you want to go. So if you're looking at Walmart, you might want to look at Costco, and it's a more expensive stock. I mean, $585 a share is a lot, but remember, it's not you just buy fewer shares. So if you are looking at the retail sector, of course you can buy more Walmart than you can buy Costco, but you just buy fewer shares of Costco. I do think it's a little bit better stock, though. I think the setup for Walmart is better, so it's kind of even. I'm not really as excited about the situation with retail. I'm a little bit leery on the retail right now, so I would kind of go slow on the retail. All right. Hey, Jay's Fresh Market. Excellent. Take a look at MCK. I think this is McCormick, right? MCK? The spice company? Am I right about that? No, McKesson. This is even a better company. Sometimes I don't know all the symbols. That's for sure. McKesson is truly a great company. And by the way, this is actually now a Dallas company. It used to be based in San Francisco, and they moved their headquarters about a year ago over to Irving, Texas, which is basically right here in the Dallas Metroplex. So a lot of people out there have moved to Dallas from McKesson. This is truly an amazing company. Consistently, this company has some of the highest revenues. I think they were number 6 or 7. I'm not sure on the revenue side, but it's a very, very strong company. Unfortunately, like many good companies, not giving us a whole lot of place to get in here. I wish this had a better chart from getting in, but I do think that we are starting to form a little bit of a consolidation. Let's see if I can draw that there. Yeah, there we go. Okay, so a little bit of a consolidation here. This is the kind of thing you always want to see you always want to buy a stock as it's punching to a higher level, and this is pulled back to the 10-day line. It's moving up here. Could you buy this thing? Well, yes, you can. It's got an extremely strong checklist, 89%. The only thing it's failing on, of course, is the 20% increase in sales. But this is a monster company. So I do like the fact that it is in the medical area. We're going to see a lot of money flee other areas of the market, and they're going to seek safety here. So this is a good safety play. Relative strength is 97. And so let's kind of look at the fundamentals on it. And what I'm doing here for everyone that's kind of taking a look is there's two kinds of analysis on a stock. One is the technical analysis. That's the charts that I'm showing. Those are the buy points and that kind of thing. There's other is called the technical analysis. That's probably the one you learned if you went to business school or something. You learned technical analysis. The problem is technical analysis typically doesn't give us as quick a read. It's more difficult, but it's still very, very valid because, of course, the technical indicators they are out about a quarter to two. They're predictive about a quarter to two out. What we're looking for in a stock, by the way, if we're looking at technical indicators, one of the great things that you can take a look, and they've done a lot of research on this, is if you see a company that is growing 20% a quarter in sales, that is extremely strong, and that is one you want to look at. Now, with McKesson is a monster company. Growing 20% in sales would be absolutely phenomenal. It's not growing that fast, but it's still growing, and boy, it's growing a lot because of the size. The profits are doing very, very well. One of the things I do want to point out, and this is one of the reasons McKesson is such a good buy, even though there's not a great buy point, is look at that PE ratio. Now, normally I'm not a big looker at PE ratios, but this is a 13 PE ratio. So remember, just in the beginning of this broadcast, we were looking at NVIDIA, great company, but at 58 PE. Right now, McKesson, which is a far bigger company, has a 13 PE. And the cash flow is very strong at basically $20 per share. I mean, that's amazing. Now, it's a fairly expensive stock, $310, but it seems to be very well priced because that's a PE of basically 13, which is phenomenally good. And their earnings per share is growing 12% a year. Where can you get 12% a year? Very little places. And there's going to be a lot of inflation, and this probably will benefit from it. So long story short, I think you could definitely start nibbling at McCormick. I would buy a full position here, maybe a quarter position, starter position. But I do think that McCormick is looking very, very good as a company. And this is kind of the area that, this has kind of been the theme of the day, last 2 days for me, is I'm looking at some of the drug stocks and the distributors of drugs. That's not in the same area exactly, but it kind of benefits from the same thing. So very, very strong and very, very good, deal. All right. Hey, what do you think about EGY? I actually own this stock, and I did kind of double down on it. I did buy a few hundred more shares on it. This is a very cheap stock, and it's in the oil and gas area. So let's kind of take a look at it. Let's see if I can pull that up. There we go. As you can see, let's show you what I'm seeing here. Okay, there we go. Great. I did buy this stock as it pulled back to the 21-day line. My first buy of 250 shares was at about $6.68, and then I did an add-on buy yesterday at 7-11, and it closed at 7-1, but after hours it's at 7-11. So I'm pretty confident we're going to see this move higher. What is Valco Energy? Well, it's a good question. Basically, it is a developer of natural gas, and right now, the natural gas is going to be going up more than likely in price. I mean, it's I think natural gas is it's coming up to about $6. It had been at $4. I'll try to bring up a chart for you here, but basically, what's happening here, natural gas is looking good. This is a natural gas play. It's a very cheap stock. Normally, you don't want to buy any of the stocks below $10, but in these resource areas, that's not necessarily a bad thing. The only thing that this is missing on in its lineup is the stock is under $10 a share. This is very common in some of the mining stocks and some of the oil stocks. They tend to have lower share prices, so you just buy more shares. That's kind of the whole idea. But current price under $10, but it's passing on everything else. So an 89 checklist on that. And the question is, could you buy it at this level? Well, I think with this one, you're not going to get a base. The last base that it had was a cut base, and the buy point was $4.31. This was back basically in January of the year, but it's almost doubled since then. Amazing run, going from about $4 up to $7, which is a lot in terms of percentage. This is really moved up. Well, will it move higher? It could be very likely, because what's happened here, of course, is we had a high at 741. We're just below that now. If it shows power, it possibly could move above that. Let's kind of take a look at the weekly chart, kind of get a view at a higher elevation here. One of the things that you're always looking for in terms of the fundamental analysis is you're looking for a stock that can grow more than 20% a quarter. That's definitely been the case with Valco Energy. In the last 4 quarters, it's grown over 100% every quarter. This is sales here, but also in profits, it's grown too. So this is obviously growing from a very, very small base. One thing I want to show you on the fundamental analysis here is this has a very low PE. It's 11 on that PE. So kind of a polar opposite company from the McKesson, the one that we just looked at, MCK, which had a 13 PE. This one has a 11 PE, which is better, but it's a much smaller company, much cheaper stock. And but one of the other things I want to show you, this is right now, as of today, the oil and gas international E&P companies, number 2 out of 197. Now, this is the top end of the market. This is where the market is pushing its capital. Its capital is going to the oil and gas stocks, and that's why this is the number. This is the second best category right now for the stock market. So definitely looking good. Could you add here? I'd be a little bit careful. I wouldn't add more than about a quarter or a half position. But if you're willing to push up your stop loss, I have a stop loss on my shares here at basically $6.80. That's basically 30 cents below where we are now. But it seems to be strengthening, and not a bad buy. Not a bad buy. And I actually found this one. If you've been following me, I actually did it with a screen. I found this one. I didn't really know much about the company until I screened for it. So, but thank you for that, bringing up that. So really, really good. I have a good one for you today. Should you consider taking it in received a full FDA approval? Get pushed down. Blockbuster drug. Yeah, here's the thing about drug. There's sort of 2 ends in the market, in the biomarket. There's the drug discovery, the biotechs. That's one of the biggest areas in the market in terms of the number of companies that are public. I typically don't like those companies because I want to see something. I want to see somebody that's bigger, because it's sort of a hit or miss. You can definitely, if you know what you're doing in the drug discovery, you can make a ton of money, but you just have to have a lot of information. And I've never been particularly good myself at buying them. It's not seeming to come up. But let's look at BTHI just for fun here. BTHI, and I'm not getting anything. Unfortunately, I'm not getting anything. So, possibly could be a blockbuster drug, but it's definitely a it's definitely a crapshoot. All right, thanks, Lewis. Thanks so much. Lilly's a great company. Would like a piece in time. Yeah, I think Lilly's pretty good. I think Lilly's going to be here. I sort of have hedged a little bit by buying Novo Nordisk as well. Lilly, of course, is one of the big manufacturers of insulin. This is a tremendously profitable area for Lilly. I bought it yesterday, interestingly enough, which kind of, we kind of got some inklings as it was coming out of this. And this is sort of how stocks will trade. You'll get it. It'll make a high. Lilly made this high, but way back here in about the second week of December of last year at 283, and then it retreated all the way down below that 200-day line, and then it came up. You obviously never want to buy anything below the 200-day line, because sometimes these things don't come back; they just continue to go down. So, but Lilly is not going out of business anytime soon. So it comes back up, and then basically it comes onto the watch list. as it's making, as it comes onto the watch list as it's making its move. And why do we know that it's a good time to come on the watch list? We look at the volume. See how when it is making this move here, also the volume is making a move as well. So that's what we want. Increasing volume, increasing price, comes up to the buy point, pushes through it, and then it pulls back to the buy point, and then sort of consolidates, and then comes up, and then as it's going to move above that range, see, that's where I bought. Why? Because as it came above that range, boom, that's where it's gonna the supply is going to be limited, and the price is going to go up, and that's kind of what happened here. Very good company. Right now, though, I wouldn't buy it because it's extended. That's sad because, by the time you realize what's going on, it's over with. I wouldn't say it's over with, but, don't buy it here. See if it pulls back, a little bit and gives us a second chance. But Lilly is a great company. I did buy a full position. Always when it works like this, you always wish you bought, 2 positions. Didn't do it, but, very good company. All right. Wow, we still have some more questions. Let's see if we can get through as many as we can here. Okay, yeah, this is the problem with CF. One more look at CF, please. Lost all the game. I know this is a round trip. I was knocked out of CF as well. This is a fertilizer play, and a good one at that. And it shows you kind of where I was in CF at, and I got in. I thought it was right. This is the danger of buying extended. When I bought it, it was extended, but I like the action on this. Boom, it went up and then wham! It just moved back down. I expect we're going to get it to move up once again. 102 is where it's at currently. It's up in the after hours. I do believe this is going higher, but this is a bunking Bronco. Very hard to hang on to. So I sold. I did make a very tiny profit on it. Not a whole lot going on there, unfortunately. I may be back in. I'm in Nutrien, which is also the fertilizer area. Okay. Hey Jim, how about the trade today based on the first reaction is usually wrong? Absolutely. And then buy the dip at the gap at 443. Good question. When you're buying the spider is a little bit different than an individual stock, of course, because the spider is an ETF, and it covers the entire S&P 500. And it used to be, I don't think it is anymore, but I think it used to be the largest ETF in the world. The question is, will it fill the gap up? It looks like we're going to get some support, and it shows it after hours at the 200-day line. Let me just check the look here to see where a 200-day line is. Yep, 447. Okay, so this is proven. This is proven that we've got support right at the 200-day line. So that's very, very good. I think we're going to, I think it's very likely tomorrow it's going to open a little bit higher. This looks like it's going to bounce, and I definitely think that we could fill the gap. Now, there is resistance basically at 458. And so, we've got about $8 a share up here, but I definitely think we could fill the gap. No question about it. I totally agree with that. And I think it, at 443 on the SPY. Okay. So yeah, I definitely think it will move higher. It definitely is moving higher in the after hours. It's up from 443 and currently it's at 446. So I definitely think we're going to see probably a reversal on the spider tomorrow. So very, very good. All right. And last but not least, what are you holding? And I'll show you exactly what I'm holding right now. And I do have some stocks, not as many as I'd like, but hey, here we go. So here's and this is kind of it for today. Here's what I've got. Here's what I am holding. I do have the Qs. I'm holding the Qs down on that a little bit. I have an oil stock, OVV. I'm definitely on that one, Derek. MPC, this is also a, this is Murphy Petroleum. This is not Murphy. This is Marathon Petroleum. This is a diesel refinery. I think we're going to see a shortage of diesel, so this might not be a bad one. Google, but not the tech company, the shipping line, Google. That's a shipping company. We talked a little bit about EGY. This is Valco Energy. That's doing fairly well. I'm in Dyno. That is also an oil company that is called Sinclair. Another company that we're in is NTR. This is Nutrien. This is a fertilizer company. NTR. You can see that. We're in Neighbors. This is oil service company in BR. I'm in NTR and NBR. Then I'm also in Lilly. That's EI Lilly. And then we're also in this one that we just bought today. This is Novo Nordisk Invio. It's a Danish company in the insulin business. Well, thank you everybody for taking a look today. I don't think I got to everyone, but I'll be back tomorrow with more stocks. And thank you very, very much. Please, please, please. It's really helps me get out to more people. If you could like this, that would be really great. So please like, please like it. Please like me. Please like me. Also, if you want to get on the action trade alerts, we have good stuff that goes out all the time, or you could just check in. It's also pretty easy. Just go to www.DallasTradingFloor. This is an abbreviated website. Just has buttons that you can click on to get certain reports and lists. But also good place to go. If you're on the action trade alerts, it's free. First and last name and an email address, and we'll get you all set up. It's free. We also do have the special Discord room where kind of in the first 2 hours of trading, I show you the trades that I'm making. And then we also have a lot of very experienced traders in the trading room that show the trades, some of the trades that they're making. So it's kind of fun. And, in real time, I try to analyze a lot of the trades that are going out. So until tomorrow, thank you, everybody. Thank you for discovering me. And hopefully more people will see it out there. Tough market to trade. Be very conservative right now. Tech isn't working as well as we'd like it to, unfortunately. What is working, some of the drug stocks are working, not the biotech necessarily. Don't go there yet. Some of the drug stocks, definitely the oil and gas and the fertilizers. Those seem to be working. Probably stay away from many of the bank stocks because even though the interest rates are going up, this is probably going to hurt. Also, be careful in the retail sector. Be very careful in the retail sector. You could definitely make a lot of money in the retail sector, but people just aren't spending because of inflation. So the inflation plays in the retail sector. You want to look towards the Walmarts of the world and Costco and companies like that aren't going to go out of business, have that pricing power, and can deliver with their own supply chains, because we're going to be facing, unfortunately, by summer, probably a lot of product shortages in this country, which sucks, but it is what it is. So I will be back tomorrow. Thanks, everybody, for watching. Happy trading.